Hey there, everybody. Thomas Wood with Basecamp Trading. It is Thursday, June 1st, and we're going to take a look at gold here. And what I want to talk about in today's video is a question I get asked all the time, which is, how do you know where it's good support or resistance? Because a lot of times traders will tell me that they think they're trading a support or resistance break. However, it ends up not running in their favor, or it has a false breakout and reverses. So here's just a really quick tip on understanding where support or resistance are and which ones have higher probabilities of having a break and run versus just a break and not really go anywhere. One of the first things you want to look at, support and resistance levels are determined by identifying pivot points. A pivot point is just a turning point in the market. So if we look at this chart, we come down, hit a low, go back up, hit a high, come back down, hit a low, go back up. Those are all pivot points. Those highs and lows are pivots. All right, and if you look at how the market moves, you have pivots all day long, all over the place. Now, if you want to understand how to read a trend, we identify trend using pivot points. So just go to I'll link to a video here, and there's an entire webinar on how to trade price action trends and reading trends using pivots and price action itself. But when we're looking at support and resistance levels, each of these pivot highs and lows become support or resistance. However, not every single high or low is a good resistance or support break. So how do we know which ones are? Well, first, we can look at the significant pivot points. So what do I mean by significant? If you look at here, for example, we come down, bounce up, and then come back down. That's not a very significant pivot point. That's a minor pivot point. A significant pivot point is basically this high here, where we came all the way up, hit this high, and came all the way back down to here. Okay, that's a significant turning point. So that'll be one thing you can do to increase your probabilities of success. But the main thing that we do when we're trying to increase the chances of having a breakout and a run is you want to identify a support or resistance level that has been tested multiple times. The more times the support or resistance level has been tested, the higher the probabilities of that breakout succeeding. Okay, so for example, looking here, we can draw support right there, and this is a good support break, and this is one we talked about in the trading room today. It had happened after the ADP report this morning, but this is a good, well-defined support level because we have pivot low 1, pivot low 2. Both of them bounced off of the exact same price point, so we know that 1267.4 is a price point that the market's respecting and bouncing off of. You can do the exact same in the opposite direction for resistance. Look for highs where the market's tested that high 2 or 3 times. All right, so the two big things you can do to help increase your probabilities of success with breakout trades and with identifying support and resistance levels that the market's going to actually run through is look for multiple pivots where the market has tested it several times, and second, look for significant pivots, the major turning points in the market. Alrighty, so that's all I have for you for today. I will see you in the trading room bright and early tomorrow morning. Like I said, I'll link to the description, or I'll link here to another webinar that teaches you more about price action trading and how to read price action trends if you don't know how to do that already. It's free. It's about an hour long. And that's it for today. Don't forget to click that like button if you enjoy the videos, and don't forget to subscribe. So until next time, happy trading.